back and to be back on a webinar. It feels like ages that I've done a webinar with you, Michiel. So great to do again. And we basically got Michiel online and Andrew and Martin. So welcome to all of you guys tonight. Well, not necessarily tonight for you, Andrew and Martin. It's daytime there in America, but wonderful to have you online.
Thanks so much for putting aside the time and for having us.
So what I wanted to just do is just take everyone through a quick intro, and then we're going to basically be looking at the launch of Med13 and the opportunity around Med13. So just some things that I think are pretty interesting in terms of where the world is going. I got asked today, I'm actually out in Bedford, which if you don't know is a little farming town somewhere in South Africa. I'm actually in a farmhouse that they've been farming in generationally since 1860, so it's quite incredible, and talking to 40 different farmers tomorrow night. And what a lot of people are asking at the moment is what is going to happen in the next couple of years? There's a lot of people talking about a global economic correction. There's a great book that I'd highly recommend by Ray Dalio talking about the big debt crisis. And I got asked this just at lunch today, and I really think it's important. When I was traveling back in 2013 and we were first getting into the medical deals, I remember asking our partners and saying, well, what happened to you during the last economic crisis? And considering the property price in America dropped between 40 to 70% in the residential sector, I'll never forget it when they basically turned to us and they said, listen, we didn't lose one tenant during the last economic crisis. And so, it's quite interesting when you start planning for where we're going macroeconomically and what we're going to be talking tonight with Med13. The second thing is that there's a lot of financial disruption in terms of the whole fintech blockchain sector. And, and this is starting to have big inroads in terms of the financial markets and what's happening. There was an IPO last week with Funding Circle, which was $2.4 billion out of London. And the third thing that's happening is that, 30 years ago, there was a big bang where effectively stock markets anywhere in the world dropped all the barriers to entry. They stopped going through all the middlemen. And effectively, people could now participate and, basically invest in any stock market anywhere in the world using the internet. And the really exciting thing is that it's now happening, for investors, for you and I to be able to invest. At a microeconomic level, though, the problem is most of us still have the problem of being stuck in one country. We still only got access to in-country deals. And if you live in England, you've got problems with the likes of Brexit. And I just want to check, are you seeing my screen here, Michiel? No, you're not. That is a major problem. So I'm going to go back some slides here just very quickly. Just so you can quickly see the slides that I had. So there's the Ray Dalio book, and this is the IPO, and then lastly, the Big Bang. And then, the big challenge that we've all got at a micro level is effectively being stuck in country. And whether we are, in South Africa and we've got our concerns around the currency and the future of the country, or whether it's England and we've got our concerns around, the currency and the future of the country with Brexit, it's the same thing. And yet investors tend to be stuck in one country. The second thing is that the barriers to be able to invest offshore are extremely high and make it very, very difficult, particularly if you want to start getting into commercial property. And the third thing is that then it gets extremely complex in terms of tax structuring and everything else, legal compliance, etc. We asked ourselves a question many, many years ago because we started off, this is my first house I bought in London in 2002. I was 24 years old. And this is the house actually over here. And basically, I bought it. It had 3 bedrooms. I renovated it. I created 2 extra bedrooms. I've owned that property, for whatever it is, 15, 16 years. It's been cash flow positive by more than £1,000 every single month for 16 years. And what was really interesting is that really birthed the creation of RPS. I had a lot of friends come along to me and say, listen, we're really interested in what you're doing both in London and in South Africa. Can you help us? And so we started IPS, International Property Solutions. We basically helped about 2,500 people invest in houses and apartments. And then we had the big crash. And I'll never forget, it was Bondi Beach, Australia, when I met Henny Besaidnout and Peter Venstra. And I remember saying to them, what are you investing in? Now, we just had the massive, global financial crisis. It was the end of 2008, beginning of 2009. And they said to me they're investing in medical centers. And I said, well, that's quite interesting to me. Why medical centers? Now, without being arrogant, I'd help 2,500 people invest in houses or apartments. I have an honors degree cum laude and a master's degree cum laude in this topic, and no one had ever told me to invest in medical. And so I said to Henny, well, why medical? He said, well, Scott, it's very simple. There's 3 simple things. One is that no matter what happens in the world economy, people need doctors. And I was like, that makes perfect sense. Secondly, doctors never leave their premises. And I was like, let me think back to my childhood. Well, that's actually pretty accurate. You know, if I look back to my childhood, you know, unfortunately in my case, Dr. Skinstad has actually passed away, but the medical premises where I grew up as a kid are still medical premises. And thirdly, doctors are very good at being doctors, but they're not accountants, so they sign very good long-term favorable leases. And I remember sitting there thinking, this is an absolute no-brainer. Why am I not allowed to participate in this? And I sort of turned to Eddie and said, how do I participate? And he said, no, it's simple. We've got 8 slots for friends and family, and you know, it's about 5 million Australian dollars each. And I was like, okay, well, there's the problem. Anyway, we worked on the solution, and we really care, you know, we wanted to consistently ask ourselves the question, how can we make global real estate investing easy? And, you know, when people think about real estate investing, they think about hassles, management, maintenance, sometimes even broken toilets. And that's if they're just going locally, let alone when they go internationally, it's global complex tax structures and accounts and everything else. And what we wanted to do through the platform was just make it easy, where people could get access to the best partners around the world. They could get niche international investments, medical being a classic example. They would have a vehicle upon which to build their own global portfolios. And ultimately, we wanted to be able to, you know, allow them to get started from $1,000. And, you know, what that allows people to do is to really just be able to focus on the best returns globally without all the hassle, but do it in a safe and simple way. And there's clearly a demand for it. I mean, when you look at the results, we've now got members in 118 countries. We've got investors in actually, this number is actually wrong because I found out yesterday it's 58 countries. The deal value is just short of $500 million. And what's also important is that there's been nearly $80 million invested, and with a you know, higher than 70% reinvestment rate, including the dividends paid out, you know, over $5 million. Now, why is this important? Well, when you look at a platform and you look at investing, you know, even when I catch Uber, I don't want to have to catch a different app in every single country I go to. When I'm an investor, the last thing I want to do is have to have a different app in every country that I go to. And so when we built Wealth Migrate, we built it with the end in mind. We built it with the intention that someone could manage their global portfolio in one place. And when people ask us what we do, it's actually really, really simple. We go out and we find the best suppliers globally, the most trusted partners. They then bring their products and they list it on the platform. Then anyone, in terms of, you know, the investors anywhere in the world can participate, and ultimately they can invest online. So let's look at how this webinar is going to work tonight. Well, we're going to start off with Martin Freeman, who's the CEO of Orbvest. They are our trusted partner. They are the ones that are ultimately going to be looking after the investment. Then Orbvest have listed Medical 13 onto the Wealth Migrate platform. And so we're going to be going with Michiel and Andrew to delve into Medical 13 and understand at a deeper level why this is a good opportunity, why they have chosen it, you know, through their due diligence. And I've obviously worked with Michiel for many, many years. I know that we look at tremendous amount of deals, and Michiel and the team looks at a tremendous amount of deals to then only allow certain deals to get through the net. And so why this deal? What is special about this deal? Then we're going to focus on you, and we're going to allow you tonight to be able to ask any questions that you want in terms of, you know, the investment space and anything with regards to either Orbvest or with regards to listing. And then finally, if you want to participate, 4 simple steps. You can basically sign up on the platform, you can select the investment, you can transact online, and you can manage your entire portfolio in one place. And so without further ado, I wanted to hand over to you, Martin, who, as the CEO of Orbvest, wanted to just run us through a couple of slides around who is Orbvest and why they are a partner that we as Wealth Migrate, you know, have as one of our trusted partners, and specifically about the company, and then we'll move on to the deal basically. So if you're ready, Martin, can I change presenter?
Sure.
Change it to me, Scott.
Oh, okay. You should have it, Michiel.
Yes, awesome. Can you see the screen, Scott?
Not yet.
I've got you, Michiel.
Yep, we got it.
All right, Martin, I can move down for you.
Thank you. So if you can just go through the various slides, the starting point is really Orbvest and who are we? And I think certainly, without further ado, good evening to everyone on the call tonight. And with without getting into too much detail, I just wanted to take everyone very quickly through who Orbvest is, given where we are in our journey. And in short, Orbvest is a global real estate company that we invest in stable income-producing assets, primarily in the United States. Why the United States? Because it's the most stable, bullish economy in the world. It's the leader in the world. It's where everything happens. And certainly in terms of real returns, we believe that in terms of the yield, it offers the most significant yield versus the properties that we're acquiring, versus in a place in, let's say, Australia or the UK, where typically yields are only 3 or 5%, and we aim for yields of 7% plus cash on cash. The next thing also is that Orbvest is specifically positioned to be able to offer South African and international investors the opportunity to earn cash on cash dollars on a quarterly basis, that's being dividends, together with a kicker when we sell the building, which then creates an overall total amount called an IRR or return. And the last thing is that, you know, we're very proud of the team that we've assembled. Our team has been doing investments into the United States in the last 5 years. We've got over $200 million under management, and we have seen tremendous success from all the properties to date. So this slide just highlights our growth from 2014 all the way through to currently 2018, where this year we will do in excess of $100 million in investments. It'll take the portfolio to over 240, and then by 2021, we believe we'll be well past 500 million or $500 million of assets under management, and well on our way to becoming a fully fledged listed REIT in the USA. In terms of our returns, what is most important for the people listening on the line, they just want to know, in my opinion, what have you got that I can invest in? Is it a stable, good investment? Is my money safe? And what are my returns going to be? And that's it in a nutshell. And you'd like to obviously spread it over a couple of medical buildings over time and build up a portfolio so that you diversify across not only medical, but medical within America, within certain states. And so we move between 8.5% to 10%. Those dividends that we showed over there are physically the actual returns that we've experienced on average on all our buildings to date. And obviously, as the market tightens and there are more players entering the market, so they might decrease slightly, but that's our kind of target rates. One of the key things that Orbvest has, which differentiates us from the rest of the players in the industry and being one of the premier investors in the United States, is our investment committee. And I'm very proud of the team that we have in terms of Henny Besodenhout, who has been in the property industry for over 30 years, together with 2 other individuals, Alan Karnach from South Africa. And by the way, all of the people in our business are South Africans, together with then Andrew based in America. And so we really do understand the market very well, to everyone listening on the call. And in terms of the other individual, we've also got David Van Drach. David has been intimately involved with the RMB Group, First National Bank, in terms of various committees, risk assessment, credit, and has a magnificent reputation in South Africa. And we're very proud to have him on the committee. And I think what people don't understand is it's easy to find a property, but it's very difficult to determine out of 10 properties which is the most risk-free of those. There are always challenges in property. It's not a stress-free game like any business. It has its issues. But at the end of the day, we certainly do a thorough due diligence, and our track record speaks for itself.
Cool.
In terms of medical, I'm just going to quickly cover exactly the key highlights. Scott has mentioned some of them. But at the end of the day, we've just found that, you know, America currently has a growing population. It has an aging population. Healthcare is going through the roof. I live in America. You can see the view behind me. It is incredibly expensive. It's a key part of your living costs. And America experiences increase in demand for healthcare facilities. Also, the tenants are very, very strong. They've been around a long time. They tend to stick in one place. And importantly, the buildings that we acquire have been around for a hell of a long time. They are stable income producing assets, and what you're going to hear about tonight. And that is one of the things that I just want to highlight. Medical and commercial real estate is very different to other types of asset classes, such as, for example, multifamily. When you go into a project and you invest in something that already has existing tenants and will be there for the next many years. It is very stable and it's low risk. If you invest in other types of projects, while the returns may be higher, always note that there's always the risk of something potentially going wrong. And we have learned our lessons also over the last couple of years. So that's a very important point to anybody listening on the call tonight, if you just want to get a good, decent return and grow your wealth overseas. Onto the slide. The slide really depicts at the moment right now the breakdown in terms of what is favorability in the USA, in terms of where people should invest. And then what you can see is that healthcare certainly remains the #1 asset class in America. I've been looking around at the moment right now. There are pockets of opportunity across America, but certainly there's a lot of people talking about it. They're very excited about it. And with the population growing and aging, it's going to increase in demand for these types of assets. So we are very well positioned. The last thing is really just a trend line showing where that population is going as life expectancy pushes out. So you're getting people living a lot longer and needing healthcare more dramatically. And so you can understand that it just enhances our value proposition. In terms of the next couple of slides, I'm going to hand over to Michiel, who will now talk further about both Texas and the various areas we invest in and the investment itself.
Michiel, just before you go there, I should have given a better intro to you, Martin. Just in terms of with Orbvest, the other thing that's important with Orbvest is that although you are an ex
Scott, can you hear us?
Seems like we've lost Scott.
Okay.
In the meantime, can I preempt and say what Scott, I think was going to say? So for everyone listening on the call tonight, I am a Durbanite. I've lived in South Africa my entire life. I have incredible experience in terms of the businesses I've started. I have a track record in starting and growing businesses to scale. And at the moment right now, I've immigrated together with my family to the US specifically for the same reasons that a lot of you on this call are experiencing: concerns around the country, concerns around the currency, and concerns around your kids and your future. And so I believe that there is no finer way than to basically be on or be in a place where we can acquire assets and deliver real returns to South Africans and other international investors to earn dollar dividends and be on the ground, a presence on the ground in New York and in America to actually look after them to ensure that your assets are safe and your money is safe. Over to you, Michiel.
That's spot on. Can you hear me? Can you guys hear me now?
Yes, thanks, Scott. You're back online. We can also see your screen, your video.
And Scott, in the meantime, I gave myself an introduction. I think that's what you were going to be doing. So
I heard it all, Martin. I wanted to say that there's been a seismic shift in the last 6 months with this company effectively now being led by someone in America, which is key to success if you want to succeed in America.
Yeah, no, awesome. All right, I'm just going to move straight forward. Can you guys still see the presentation screen? I just want to check out if you can.
Awesome. Texas.
Yeah, no, sorry, Andrew, and now Martin. To my American colleagues, it's good that a little bit of an outsider just give you the dramatic impression that we got of the state of Texas. I think what is significant for us is when we started looking at where to invest in the United States, effectively, Texas was always standing out from all the research, really because it's such an unbelievable big economy. It's pretty much the second populous state in the United States. And then I think some very interesting levers that the authorities made practical in their policies is effectively a few things. The first one is the at-will state, which effectively means that you can hire and fire your workforce as the business requirements is. It means that there's not a lot of unions there. So as a result, it's very conducive to very large businesses. Secondly, as you know, Americans are very prudent to sue each other, especially when it comes to medical malpractice. And in other states, if it's uncapped, a doctor can pay up to about a third of his income on just paying that insurance. But in the state of Texas, it's capped. So it means that it's very favorable conditions for doctors. And then also, very nice incentive for business to be there is effectively no state income tax, and I think a very clever one is the no transit tax. That means that people can use the import harbors, specifically Houston, so that goods can transit through Texas and only pay the actual import duties in the state of arrival. Some people think that's a little bit not so clever, but in this case, it's such a way that it encouraged the logistics, and as a result of the huge logistic infrastructure that was created in that. And then I think the key aspects or cities in Texas is really Houston, Dallas, and San Antonio, and Austin as well, which forms a Texaplex, as we call it, and it's almost like 80% of the population stays in that state. So, yeah, so if you're really into real estate and you haven't been in Texas and you're not in Texas, it's something that you really seriously consider. So as we started out investing in the US, we originally started out in Georgia, Florida, and these states. There's nothing wrong with them. They're still extremely good, and they also adhere to the landlord-friendly side of the states. But you cannot ignore Texas, and that's why we went into Texas. This would be our, I think it's now our fourth investment in Texas, so we're very bullish about Texas. Then coming to the actual city, Houston, Andrew, I think you've spent quite a lot of time there. Maybe just give us a US perspective from what you see when you think about Houston. What is significant for you, and you know, why is it so attractive for us to be there?
Well, in Houston, the two primary businesses that fuel the economy are medical and the oil and energy business. Two businesses that, quite frankly, are somewhat recession-proof through any economic upheaval here in the United States. The third largest business is the import-export business, because Houston is close to the ports, which are on the coast. So the growth of Houston has been continuous and sustained for over 25 years recently. It survived very well through the downturn here in the United States 10 years ago. It has not only rebounded, but it has come back with a ferocious appetite economically.
Yeah, so my experience has been that it's got one of the lowest jobless rates in the country, and we actually have seen real salary growth there. We've got also the multifamily project that you know, Scott, from Cyprus side, and we've seen some real growth in the salaries. And then not to forget, it's also NASA Center there. So Houston has got a lot going for it, and we specifically looked at it from a diversification perspective. The oil is less than 40% dominant at the moment. Yes, it's creeping up again with the oil price. So from our perspective, it ticked all the boxes. Yeah, and then the actual opportunity, Andrew, you guys with your network brought it to us. Found a fantastic partner on the ground. Maybe just give us an interlude to this deal, and you know, why is it so special, and why we just jumped at this opportunity when we saw it.
Okay, there are several aspects of the deal that make it unique and special as far as an investment for us. First off, Houston has one of the few states where medical licenses on hospitals are allowed to be owned by doctors. This is very important because one of the #1 sources of revenue for the hospital is referrals from doctors. 2 out of our 5 sponsor partners on this transaction are actual doctors, and they are also the 2 leading sources of referrals for any kind of treatments or so forth into the hospital, providing revenue. The license stays with the property. It doesn't move with the owners of the corporation, which makes assurance to us that this will always be a hospital and be kept with the lease that we have. We have a new 20-year lease with escalations annually. It also reimburses taxes and insurance and other expenses for the building. The ownership of this hospital took over a little over 2 years ago and have performed a tremendous turnaround in the profitability as well as increasing the revenue of the hospital. They have invested over $7 million renovating the hospital over the last 2 years and are getting ready to spend an additional $2 million now on the exterior after completing all the interior renovations.
Andrew,
I mean, just very critically, sorry to jump in there, but very critically, because you said something, Andrew, and I just want to make sure that everyone picked that up, because it's, again, you know, I could buy a restaurant or a commercial premises, and the restaurant could literally move down the road tomorrow morning. But with a hospital and what we're purchasing here, the licenses stay with the premises. So even if the tenants were to do something dodgy, like they can't go and get a new license just down the road. Like the license has to stay with the building. I want to reiterate what you said there, but it's so important for people to understand that, because when I first understood that in sort of 2013, 2014, a real light bulb came on, because one of the biggest problems you've got in real estate is that, you know, you might buy something off someone, particularly if it's an owner occupier, and then they do go down the road and you've suddenly got a competitor. You can't have that in this situation because the license stays with the building. And sorry to butt in, but I just think it's important that people understand how secure the income is, basically, and why it's secure.
No, that's fine. No, I'm glad you reiterated it, because that is one of the most important aspects for the surety of this hospital for the investors. I agree. The other part that's important to know about this hospital is this hospital, while the current owners have only had it a little over 2 years, this hospital has been serving the community since the mid-60s. It is a landmark in the community. The community depends upon it. It has services. The only two procedures that it cannot perform on the hospital premises are open heart surgery and brain surgery. They service the community for every other need medically needed, from x-rays to scans to MRI to labs, an emergency room, delivering of babies, to rehab to ICU. They service the assisted living community by servicing their patients when the assisted living home cannot take care of them. It is a landmark in this part of Houston. It is depended upon by the community. And what makes it interesting and why it is sustained for so long is its location. It is in the northern part of Houston. To the north of the hospital is the largest concentration of blue-collar workers who own their homes, who are the middle class or lower middle class of Houston. And to the south is one of the fastest growing regentrifications of the Houston suburbs. From downtown, moving north along North Shepherd Road, which runs parallel to Interstate 40, the north artery which leads out of Houston to northern United States, there has been an increase in property values due to baby boomers and people buying homes wanting to get out of downtown Houston but still having access to downtown Houston. We have homes that were worth $250,000 to $300,000 being bought and torn down to make way for homes and condominiums and townhomes worth $750,000 or more. This is going to become the new part of Houston for families to live with access to downtown, accessing their jobs, but also needing amenities. So this hospital now becomes even more on demand, servicing the blue collar to the north, the middle class, the lower middle class, and to the south, the middle class and the upper middle class. The other thing that's important to know is with this hospital having been around since the mid-60s, it has relationships and contracts with the in-network insurance, which is very important here in the United States. Those in-network contracts are with all the employers, and with those contracts, it provides the best insurance and the lowest out-of-pocket expense for the insured. So because these contracts have been in place for so long, it allows the hospital to have more profitability than its competitors, because they have negotiated these contracts years ago and the in-network insureds have increased because of Obamacare, because that is what is being offered on the Obamacare portal is in-network insured. So this is very important too, because besides the license being important, now we have a revenue stream that is going to grow over time as more and more insureds in the in-network become greater because of Obamacare.
Yeah, Andrew, I think the other thing that's fairly unique in this transaction is that the doctors actually operate the hospital in a company, what we just loosely call the operational company. And this operational company has then signed a 20-year lease. And I think, if I remember correctly, the escalation is 2%, or is it 2.5%?
It's 2% per year, plus they are paying all expenses related to the property, meaning property taxes, insurance, and expenses to maintain the exterior of the property. The operating company will maintain all the interior and all the utilities for the hospital, since it is a 24-hour operation.
Yeah, and then the operating company then has the lease with the property holding company, and that is the investment that we are doing from a property perspective. And the rationale for the doctors doing this, it's called a leaseback transaction. The rationale is that they are unlocking some of the equity that they own. They are extremely wealthy individuals that is the sponsors in this deal, and these individuals will then use the proceeds of this transaction to further expand the hospital operation. It was fascinating to actually meet them when we were about a month and a half ago there, where they actually now have created a very niche product, a very profitable product. And for those that don't know, Americans do have a drug problem, and they also obviously made a lot of drugs legal now. So what this hospital has done is actually implemented the third in the country, first in Texas, what they call a rapid detox center for guys that need to rehabilitate. The biggest thing always is to, they fear the withdrawal symptoms, and these doctors has devised a very special technique where when you are put to sleep for a week, or 3 days, 4 days, I can't remember exactly, then they actually detox you while you sleep, so you don't actually have the very bad withdrawal symptoms. And as a result of that, the project has been quite successful, and it's also very lucrative. So that's one of the key things that they implemented. We actually visited the center, which was just opened. Yeah, I think that is pretty key to us. And then I think, like always, from an investment focus perspective, we definitely secured the income with a lien on the hospital license, and then we actually also negotiated a 1-year full rental income in escrow. It means that we pretty much have got 1 year in advance rent done, and this will be like a first in, last out scenario. So it basically means that we've got a 1-year buffer should anything go wrong. And then lastly, the property is effectively a hub and spoke center. What it means is that the doctors are expanding to have satellite offices a little bit away from the hospital, but very importantly, they strategically kept the key procedures at the hospital. And like Andrew said, they can produce most of the actual procedure there. So it's actually feeding the hospital in a very, very efficient way. So all these things contribute that we pretty much have done our very detailed due diligence, that we're comfortable that these guys have got more than enough income stream to service our lease. The lease is 20 years long, so from our perspective, it's an extremely valuable income stream, and therefore, if I then switch back to the actual deal values, you can see that the deal is just over $25 million. And it can become a very attractive target. So exit strategy, like always, we envisage around about 5 years, with obviously the proviso that if economic conditions doesn't bode well for a sale in year 5, we can either shift a little bit earlier or a little bit later. And then also real possibility to exit is that these are one of the last privately owned hospitals that we saw, because in America the hospital systems are becoming very large and they are buying up a lot of these private hospitals. So that is a potential exit. What's also significant on this deal is that it's got a really extraordinary cash-on-cash return. So we're pretty happy with that 9.5. When you look at the detailed figures, you'll see it's an average. It starts around about 9% and it goes all the way up to 10% because of that 2% escalation. So this deal is really, Martin, focusing on that cash-on-cash that you've been alluding to. So this project is by outstep made for investors that want cash-on-cash. The internal rate of return is also pretty good. Obviously, that is a future value. We can't project it. It's our, let's call it, a reasonable estimate that we made. But I think what's really driving it is the cash flow. And then last not but least, as you know, we always look at deals that we have a potential value play. This value play is actually twofold at this property. When investors looks at the brochure online on the Wealth Migrate website, they will find that there's actually another 90,000 square feet available for repeating the same hospital on the same land that we will be owning as part of this deal. So it means that we can actually double the hospital by building another hospital. So that's one option. And then directly across the actual hospital, like always, is a medical office block. And we definitely are considering buying that as well. So it means that we can really build up a significant node in terms of this hospital, so that we can also have this twist or value add that we normally try to do. And that's not even yet in these figures built in. Obviously, that is what we're trying to, or what we're going to target to do, is really do that, should the figures works out. But I just want to establish that, you know, we're very clear that there's a massive upside that we can add this, really, in our view, to build up a portfolio. Our strategy is very clear. We're not just buying a property for the sake of a property, but really to get it to actual more value than just once off building. Yeah, so I think that, Scott, that highlights more or less the deal and so forth. I think we can take a bit of questions. I haven't monitored the questions there. Maybe you can help me out if there's specific questions from the investors. And then I also got a little piece on Medical 12 if you want to go there. But I think that's the essence of what we wanted to communicate this afternoon.
Fantastic. So what I'd like everyone to do is, if you've got any questions, please send them through. I'm just going to change presenter back. Give me 2 seconds. Boom, boom, boom. So if I come back to the presentation, so if you've got any questions, to send them through. I want to basically remind everyone that you should be able to see my screen again now. That in terms of those next steps, if people want to, they can basically go to Wealth Migrate and be able to invest in Med13. It's actually there. If they want to speak to one of the Orbvest investment consultants, just type in their investment consultants, and you will be able to, get someone to give you a call if you want to chat through it in terms of the process. So just in the chat box, so in the top right corner, you've got chat box. Just type in their investment consultants in terms of that process. And then really, whether you're a long-time investor, I see there's a number of people online that are long-time investors. This is another good opportunity. My strategy is that Medical 11 is not necessarily much better than Medical 12. Medical 13 is not much better than Medical 14. And just be clear with my point. It's more about building the relationship and having the financial discipline to keep investing in all the deals, as we go. And I've been investing since Medical 1 in terms of the different processes. So I would highly recommend that. Just before we go to Q&A, just to let you know some other things that are coming up. If people are interested, my CEO letter came out last week for Wealth Migrate, and so if you're interested in that, just type in their CEO letter. We do have a number of people who have been asking about the UK. We do have a UK extravaganza, so we've got a webinar on the 16th of October if you want to look out for that. And then just some things that if people are interested in, I will put them in the chat box. We've now got an investor test so that you can actually work out exactly where you are. It's like a GPS, you know where you are and you know where you want to get to, and it helps you create your own personalized path for wealth. We've got the micro degrees, so everything that Michiel has been sharing, we've built into a micro degree. All the lessons that I've learned from Henny and many other very wealthy people is built into a micro degree. So if you want to get up to speed with the nuances and the details and the really sort of deeper level of what Michiel's talking about, there is the micro degree, and again, I'll put the links in the comments. We've gotten in a circle now so that people can participate and get access to better deals and really understand. And then if people do want to go, deeper, we've got the masterminds. And again, I'll put the links in, and people can ask for more details if they're interested. And then lastly, we do have a new launch coming at the end of November, where we're going to be having a lot more selection. But for now, for tonight, I want to remind you, we started off with talking to Martin Freeman. He is actually an ex-client of IPS. He invested in houses, came on a buyer's trip. He then invested in the commercial deals. He's been through the EB5, and he's now immigrated to America. So I really think that Martin has been through all the different steps of understanding what it's like to invest overseas. He's also invested in London. So he's very experienced in terms of international property investment, real estate investment, and is now heading up the Orbvest Group as the CEO out of New York, and has shared with you why Orbvest. I've learned one thing in my life when it comes to property. Most people think they're investing in the property. I believe they're wrong. It's actually they're investing in the partner. And it's really important to understand that, Orbvest is the partner on the ground that is standing up to ensure that, not only when things are working, but when things are not working, that they are there in terms of that process. And then obviously, Michiel and Andrew have taken you through Medical 13, the opportunities of the Orbvest Medical 13, why it's such a good deal. I must admit, when I read through it myself, it really does look one of the better ones that we've had for a long time. So well done to Michiel and Andrew for everything that you've done there, because it's really looking exciting. And really what I wanted to do now was move to this point, which is you, and discuss with you, do you have any questions? I've written down a couple of questions myself, Michiel, that I would like to run through, but I just wanted to see quickly if there were any questions from any of the attendees. So I see that there's a couple that are coming up. So there's a question here, who exactly is the Cornerstone Investor, from Francis?
In terms of the Cornerstone Investor, I hope I understand it correctly. In this specific case, the Cornerstone, or actually let's call it differently, is the sponsor. They are actually standing surety for the debt. It will be in the region of about $14 million, $14 million, if I'm correct, Andrew. So these are the actual doctor partners. There are 5 of them, and they will be standing surety for the debt in this specific case.
Michiel, I think if you look at the documentation, there's a $3.6 million investment from myself, the investors, and then there's a $5 million equity investment from Cornerstone Investor. Is that the doctors as well?
So if
yes,
I can
Scott.
Go for it, Michiel.
What Orbvest have been doing is also talking to larger investors, specifically to institutional clients, and the 5 million, as Scott alluded to, would be really focused on that market. But we always have been very clear that the larger players, together with the retail investors or the smaller investors, will always be in parallel. I think that's in our DNA, that we want to make sure that everybody gets a chance to invest shoulder to shoulder with even the larger players.
And the point
and
I was
just be clear,
Scott,
after you, Martin.
So I was just going to make a point here, that in terms of this investment, what you'll notice is that we've moved to the next level now, where hopefully going forward, the bulk of our deals will be where we are the majority owners, we control the building, we control everything, and that's very important for an investor. Also, what you'll notice is that the cash-on-cash dividend yield is very, very good on this project. I don't believe it's going to be so easy to get these kind of deals going forward, because the market is getting very aggressive and tightening, and so it is a great building. And the last thing is, in terms of Cornerstone Investor, which was the question, going forward, what we would like to see is really blue chip companies, institutions, real good big players investing alongside us and alongside yourselves. And we've got some great announcements that we'll be making in the next couple of months as we cement these relationships. So we'll go enormous as a team and take down buildings together, but with the view that we'd like to own them.
Perfect. So, and again, just to be clear to everyone, the strategy from a Wealth Migrate perspective is to partner with people like, partners like Orbvest who have relationships with institutions. Because if you think about it, when the institutional money comes in, and you can partner with not only Orbvest and the partner on the ground, but also the institution, it allows us to get access to better quality deals. It also allows them to bring more deals, better velocity of deals, which allows more selection. So, for me, Cornerstone Investors actually are critical to the strategy in terms of that process. So I think to your question, Francis, is that there's a number of conversations with the institutional investors at the moment. But as per Martin and Michiel's thing, it's not finalized in terms of that process. Would that be accurate to say, Martin and Michiel?
Correct.
Francis also asked, the minimum investment amount is currently $5,000. Will it sometime be reduced to $1,000 like it was for Med 12?
So let me take the lead on this. From an Orbvest perspective, we believe in picking our niches. And yes, we would love to have people from as low as 1,000, but our core focus in the business is, to be able to service thousands and thousands of clients at $1,000 is not really our key strategy. We would like to have many thousands of clients who are medium to high net worths. I'm very happy to have someone enter the market and test us, but ultimately, if someone's going to build a portfolio, I think that to really feel the juice of getting dollar dividends on a yearly basis back, we'd like to be playing at 5,000 minimum. As I said, the perfect answer is we're not going to turn someone away for $1,000, but over time we would like them voluntarily to move up to the 5,000 and realize just how amazing it is to get dollars in your bank account and not South African rands. And if the rand falls out of bed, even better if you've earned the dollars.
Just the last comment to that, Francis, is that if you take the rate of exchange cost on $1,000, it's really, really very expensive relative to what you will earn. So that's why we really encourage you not to do just 1,000. However, when you are already on the platform and you get your dividends paid into your wallet, as we call it, and that dividends is 800 or 500 or so forth, because it's already on the platform, you can reinvest that at the lower amount. So from that perspective, together with our colleagues at Wealth Migrate, we are going to plan a day where we're going to say when the dividends are coming through that there will be a short time where we will lower it, and then you can take advantage of that timeline.
Yeah, so I think so thank you to Martin and to Michiel. And I think really for everyone online is that really is where the partnership between Orbvest and Wealth Migrate comes in. And particularly with the launch of the version 5 of the platform, which is coming at the end of November, we will be able to drop that minimum investment amount seamlessly for not only people doing the dividends and ultimately be able to achieve Martin's process or focus, which is to go after high net worth individuals, but also be able to allow people to invest from $1,000, etc. So watch the space, Francois. It's a work in progress in terms of where we're going. Jürgen's asked a question, why does the previous owner want to sell a lucrative investment as in Medical 13?
Yeah, Andrew, you can maybe help me out. You know that when I walked into the building the first time, I went straight to Saeed and I asked him that question because it intrigued us, what was the rationale. So maybe if you can help me out on that one.
Scott, repeat the question one more time so I answer it properly.
Why would someone want to sell if it's a lucrative investment?
So the most important part of why they're selling is they're not selling. They're looking to basically take equity out of the business, because what's important to know about the license and what Michiel alluded to in Texas, each license is only allowed so many hospital beds. This hospital currently has 117 licenses. However, it has an additional 220 beds within the license that can be used. So as Mikhail said, there's the opportunity to expand as much as 90,000 square feet on the property, but also they are creating satellite offices that will feed additional business to the hospital, and they're going to use some of those beds to put into those satellite offices. In order to do that, versus taking out debt, they're selling off the interest in the hospital to give them cash to go add these satellite offices, which will in turn will boost the revenue of the hospital.
Perfect. And this probably ties in with Michael's question, which is why would the current owners, after spending $7 million on renovations, want to sell? I don't know if that answers the question, but it is actually one that I had written down, because I see that there's $5 million for renovations and then a further $2 million on the facade.
That's correct.
Yeah,
And the hospital prior to the current ownership was owned by 39 doctors, and it was owned by those 39 doctors for over 5 years. And unfortunately, while doctors are excellent at taking care of their patients, they're not excellent at agreeing with one another when it comes to business. So the hospital always needs constant upkeep, and it had not had upkeep during this time frame. So they had to go in, fix the operation as far as providing better revenue and better profitability, but also doing those upkeep items that were put off during that 5-year period.
Yeah, so in essence, what they do, Scott, is they are basically on a turnaround strategy, and then they are extracting some of the real estate equity to actually invest in the operation of the business. And they can get from hospital operations, it makes from a business perspective more money than just keeping it in property. And so that's why from our perspective, we get a long stable rent, because we are focused property persons and they are focused hospital operator that can multiply this money in their eyes more effectively. So that's why they need the cash, but they also, like always, still want to own a piece of the real estate. So they actually will stay, I think, in the region of 10 to 15% of the equity. They will actually still stay in the building. And as you know, that's one of our key criteria, is that sponsors must have a skin in the game. So I think it creates a nice middle way from extreme sell or keep it 100% for themselves. And this middle way is really the value that Orbvest, together with Wealth Migrate, is unlocking for them.
I think also just one thing I want to jump in here and say is that, you know, the healthcare sector is evolving dramatically in the States, and new technology coming out is very, very expensive. However, the money you can make off that new technology is quantumly high. And so, you know, for doctors to be able to extract $5 to $8 million and invest it, they can turn that 2-3 times versus just being in property where you're getting a good return. But versus South Africans or international investors who are very keen to earn 8-10% a year in dollars, it's the two different sides of the equation.
And I think one thing that Andrew alluded to, which is quite important, when we did our medical, you know, that first investment in medical in Atlanta back in 2014, it was exactly the same thing. You know, people asked the question, well, why would they want to sell? I mean, it was such a good investment, and has proved to be such a good investment over the last 4 years. And the reason being is that there were, I think, if I remember rightly, there were 7 doctors, and, you know, 3 of them were leaving, or 4 of them were leaving, whatever it was. It was sort of 2, 3, or 4 of them were leaving, and they couldn't agree the value. So the only way to agree the value was to sell. And so you quite often find, to Andrew's point, where there's 39 doctors, that these things also create, they have an ecosystem of themselves. And often the reason that they're selling is because some people are retiring, they're moving on, they want out of the practice, etc. You know, so these things all add to the fluidity of why these opportunities become available. And it's just important for people to understand that. Hunter said here, just in terms of generally, in terms of the demand within the deals in Wealth Migrate, and he says he invests in a number of different platforms, particularly in Europe, and that there's many deals. He said that Wealth Migrate is one of the best platforms, and he's surprised by the interest of investors being low, because you know, a deal like Medical 12 or 13, there's effectively, you know, they're offering less security and less return, and yet there's more capital. And I think, you know, really, Hans, to give you some clarity, and this is obviously, you know, it's a focus tonight on Orbvest and and on Medical 13. But when one looks at Wealth Migrate, there's three major components to being a very successful marketplace. The first one is having trust. And so there's a whole bunch of components that we're building into that, like reputation management systems and rewards-based systems, which increase the trust and transparency that are really important. The second one, and probably the one we failed at most over the last 4 to 5 years, is selection. So it's all good and well to have a wonderful medical building like Medical 13 in Texas, but people also want other types of things. Some people want to invest in deals that are going to offer them passports. Some people want to invest in London, etc. And up until now, we haven't had that selection. And so really the intention, by the launch by the end of November, is to really bring that selection. We're going to have cornerstone investors, as I would call them, cornerstone investors like Orbvest and wonderful quality deals like Medical 13. And if you go to a supermarket, the way I would see it is that, that's like going to the big Woolworths or the big Tesco's, whatever. But if you go to a supermarket, there's also all the other things. There's the video store, there's the bottle store, there's the flower person, and maybe, all the little shops and everything else. You need that variety for people to want to come to. And then the third component is that it needs to be seamless. It really needs to be convenient in terms of the process. And up until now, we've had, our investors have had to jump through quite a few hoops for KYC, and some of the processes haven't been that convenient, if I'm direct and honest. And with Medical 13, Medical 13, what am I talking about? With the launch of the marketplace version 5 coming out at the end of November, a lot of that convenience is going to be solved now, with it all being digital and seamless. So watch this space, and including all the links that I've already put in there for the in the chat box. You'll see there's a whole bunch of links to the Wealth University that will also drive that demand. And there's a question from Johannes that says, why is the debt term so long? 40 years seems abnormally long.
Andrew?
The debt term is not 40 years. It is an amortization of 40 years. It is still going to be a 10-year debt. But the reason why that the amortization is 40 years is that this is a government-backed loan, meaning it is a HUD loan, which the government guarantees the bank repayment in the event of default. So, but the HUD loan is a 40-year amortization and a 10-year term.
And also, one of the things that I think is very important, there's a great section in the documents, the project brief document that they've put together. I think I've actually got it here. If I can share my screen, I'll pull it up quickly. But where you guys have done a great job on talking about risk. And, it's interesting because you talk about risk in there, and you talk about also the fact that, interest rates might rise and how you're looking to, have a fixed term. And I do recommend that people look at the risk, because, any investment has risk. And it's just important that people understand that and, and can view it. So I've actually got the document here. If you look through, so this is the document I'm talking about, which you can download on the Wealth Migrate platform. It's got all the different details, all the stuff about the medical sector. Well done, guys. It's a great document, in my opinion. But the part that I wanted to show you was down the bottom here, which was after location, so a bit further down, right at the end, actually. It was all about risk. Where? What page, Michiel, sorry?
I think it's page 14, if I'm correct.
Yeah, here it is. So there's a great document on risk, basically. And I'm a big believer when it comes to risk. Every single investment in the world has risk. So rather understand what the risks are. So they've been through the tenant risks, they've been through the interest rate risk, which is exactly what I was talking about, and then valuation risk, which I think is, is really important. It's one of the things I wanted to bring up. So I think it answers, that question. So, from my side, a couple of questions from my side. A number of them have been answered. One of them was, you spoke about the value play. And again, I want to just point this out in this document where you've spoken about the value play. So one of the things that I think is very important is that any monkey can go out there and buy a building and sort of just hope that the market goes up. But what we've always tried to do, and what Orbvest are really focusing on, is a value play. And so if you look here, sorry, I'm just bouncing around with this document, but I wanted to show you quickly here, the value play. And what basically is important here is the debt is part of the, again, it's a government-backed loan, so it's one of the cheapest debts that you can get. And if you read further on in this document, which Andrew's already mentioned, there's actually quite a lot of land that is available. And I'm specifically using this PDF here to bounce around so that you can see that the information is available to you rather than just the PowerPoint. But if I go to the land portion, which comes up over here, you can actually see the land that is available around the property, which again is key to understanding the value plan. I think, Michiel, you spoke a lot about that. You haven't even taken that into account when it comes to the returns.
Yeah, it's just absolutely fantastic, Scott, that we can expand. So effectively, we can double this project quite easily. There's a number of ways that we can do it. And like Andrew alluded to, this is absolutely at the center, north center, just below the huge Woodlands development. So it's like absolute key location. And we've seen the property around it, how it's actually been upgraded by virtue of redevelopments. So I think it's just a question of time that this hospital will be just completely full, and then the natural expansion is that there's ground that we own. Remember, the value of that ground is like doubling every 3 to 4 years. So we can even just sell off the land maybe for something. But anyway, bottom line is the investors will own that land, and we can obviously look at best use for it.
And if may I add, the land is not subject to be only a hospital. We are allowed to put medical office, extended care, assisted living, anything that would fall under healthcare is allowed to be put on the land. So we are not restricted only doing hospital, which is an additional guarantee of something being done on the land to assure the investors it is not going to be restricted.
Well, that's fantastic. I'm glad I asked you that question then, Andrew, because that's quite key basically in terms of that value add. So I'm just asking people with regards to the poll, if you want to vote, go for it. And I think it's quite key, because it'll allow, the team. Obviously, I've been through this PDF, and specifically I went through the PDF and I didn't just go to another PowerPoint, so that that this PDF's there and you can actually look at it and find all the information in terms of what you're looking at. If you are interested in Medical 13, there's a poll up at the moment, and just if you want to express an interest there, then we can obviously help you, and we can save your time and make sure that we give you the right information in terms of that process and what we're doing. And then I think just the last question I had, Michiel, and I don't see any more questions coming through. If anyone does have any questions, let us know. Otherwise, we are going to wrap it up because we're pretty much on the hour. Talk to us just a little bit about the returns, Michiel. So you've spoken about a cash-on-cash return up to 9% and an internal rate of return. It said the best case scenario, I saw there sort of over 16%, etc. Just talk to us a little bit about the returns just so that people can understand that.
Yes. So the returns, you can see we specifically made an average cash-on-cash return. So in year 1, we envisaged 9%, and in year 5, 10%, and you will see that that is an actual average over the 5 years. The reason why it systematically goes up is that we have built in the escalation that we alluded to. So it means that we increase the rent year on year. And then what's very nice about this lease contract is that the costs that goes up as well is deducted from the tenant. So it means that it's a triple net lease. So it means that we don't are subject to the increases in operational cost. So that is a function that the operating company must do, and therefore the cash-on-cash return is the 9.5. So if you then take the cash-on-cash over the 5 years, and you then also sell the property at a profit, you will get a capital gain. And this capital gain that you will see, let me just get some examples here. There's the best case and the base case. Let's just work on the base case. You will see that there's a capital gain roughly after tax about 30%. So when you add that cash flow, which I alluded to, plus the capital gain, when you combine that mathematically, it basically gives you what we call the internal rate of return. So the internal rate of return is a good way that you compare the cash flow to another investment, because it takes into consideration the time value of money. So from that perspective, what we always do is we give you what your income is going to be, and then what we do know is that your capital gain is a good estimate, but it's definitely not guaranteed. And so that is why we thought it would be best to give you a base case and a best case. So what we're currently doing during the due diligence phase, there's some ways that we can even further optimize the deal, and then as a result, hopefully we'll get to the best case scenario.
Fantastic. Okay, well, I think you've answered all my questions in terms of my preparation for the webinar and going through it. Obviously, I know Orbvest very well and work with all of you guys personally. So, you know, I've got full faith and I've invested in all your deals from the very beginning. So, you know, I certainly, you know, feel very comfortable with what you guys are doing and how you're doing it. We've spent the time tonight listening to Orbvest. We've been through the deal. You know, everyone that's on the call has had the chance to ask any questions. And now, you know, if you are interested, really, you can go on the platform. You can actually select, transact, and get going. If you're listening to this as a recording, then just go to the digital real estate group on WhatsApp or reach out to us on, you know, on social media, on Facebook, etc., and we'll be able to answer those questions for you in terms of where we're going and how we're doing it. I wanted to finish with you with 4 slides, and I think they're quite important. You know, this is a picture of my son, and he was 5 years old. And he's basically buying red houses and green hotels. And he's learning at a very young age that to get a passive income, so I want to be very clear here, when middle-class people buy houses, they tend to go after capital growth, which is the way Michiel finished there. We're not talking only about capital growth. We're actually talking more importantly here about income, which is what the wealthiest people in the world focus on. And my son is learning that to earn passive income is what we call smart investing. You know, through the platform now, people can actually participate. And, you know, my wife and I, this is our portfolio where we own a mixture of residential and commercial assets across 4 different continents. And, you know, being able to invest from as little as $1,000. So we are diversified, not only in residential and commercial, we diversified across countries, across asset classes, and across currencies. And you too now have that opportunity. It's what we call smart investing. When we look at the wealthiest people in the world, they for them, it's all about generational wealth. They have things called family offices. They basically create a personalized path for wealth, you know, for that family, and it's all about creating generational wealth. And we believe that, you know, now, you know, that generational wealth creation is what we call smart investing. And with technology, we basically are putting smart investing in every single person's pocket. And so there's no one that has the excuse anymore to say, well, I can't afford to invest in a medical building, or I don't have access to a medical building, or I don't have the knowledge to invest in a medical building. Because nowadays it's not acceptable. You know, 10 years ago, it was a major problem. But today, it's not a major problem. And technology is now allowing you to get access to partner with the best partners like Orbvest in the best real estate market, you know, arguably in the world at the moment, like America, and also in one of the best sectors, which is medical. And, you know, from me, that's everything I had to say tonight. I really wanted to say a huge thank you to Andrew, who's coming live from Atlanta, you know, Michiel, who's coming live from Pretoria, and Martin, who's coming live from New York, who've been sharing with us not only about Orbvest, but about Medical 13. And to all of you that have been online tonight, you know, thank you. Thank you for the questions. Thank you for participating. And to answer your question, why are more people not participating? Well, I put that challenge out to each and every one of you on this call. Let's go out there and tell people, those people in our communities, those friends, our colleagues, tell them that there's a better way to invest. Tell them that there's a better way through technology that is both safer and simpler. And more importantly, they can get access to better opportunities, which they are not getting through the current financial system. And so, Hans, I put that challenge back in everyone's lap, because I think we've all got a responsibility to share with people that there's a better way for them to take control of their finances. And that's all from me. Any final comments, Martin, Michiel, or Andrew?
Thanks so much for your time, and we look forward to chatting to you in the future.
Awesome. Thanks for the opportunity, Scott. Forward to help the investors out in this deal.
Thank you, Scott. Appreciate your time.
Excellent. Good night, everyone, and good luck. Enjoy Medical 13. It looks like a wonderful opportunity, and get in and share it with your friends. You know, as I said, we've all got a responsibility to allow people access to good quality deals. Good night.
Good night.